Good morning and welcome to our annual media conference. Ladies and gentlemen, 2020 for us, like for the entire industry, was a very challenging year. But for Volkswagen, this has also been a year of major forward investments, and together with all of you, we would like to look back at those very special 12 months, and at the same time, of course, we would like to look ahead. I would like to welcome the Chief Executive Officer of Volkswagen, Ralf Brandstätter, and the Chief Financial Officer, Alexander Seitz. The two gentlemen have prepared brief presentations for you, and then later we'll be happy to take your questions as usual. Just a brief technical note. If you have any questions, you can submit them at any time through the chat function, and obviously, if you so wish, you can also dial in by phone. So, with that, it is now over to Mr. Brandstätter, please.
Ladies and gentlemen, welcome to the Volkswagen Annual Media Conference. 2020 was a challenging year, but we demonstrated our strength. Thanks to swift action and the extensive safety measures we put in place for our staff, Volkswagen successfully mitigated the impact of the coronavirus pandemic. Following a profit contraction in the first half of the year, we were able to fight our way back thanks to rigorous cost discipline and a strong sales performance. At the same time, we continued to make progress with our electrification offensive. For Volkswagen, 2020 was a breakthrough year. We also took another leap forward by enhancing the digital customer experience in our vehicles. With customizable infotainment systems, infotainment, augmented reality, and over-the-air updates. Furthermore, we strengthened our brand. We always have to offer more than the competition. And we are delivering on this promise. Our vision: over the next few years, we aim to make Volkswagen the most desirable brand for sustainable mobility. Ladies and gentlemen, last year we demonstrated our resilience and strength. We achieved this thanks to our tireless teamwork under adverse conditions. Every one of our employees contributed to this. I would like to take this opportunity to say thank you to all our colleagues on behalf of the entire board of the Volkswagen brand. I would now like to go into the key financial data for the 2020 financial year. Overall, Volkswagen delivered 5.3 million vehicles to customers. This is 15% lower than in the prior year. We thus turned in a respectable performance during one of the worst economic crises on record. We were even able to further solidify our market position. Sales came in at 71.1 billion euros, down from 88.4 billion in the prior year. This decline was primarily attributable to the drop in sales. With an operating profit of 454 million euros before special items, we remained profitable in 2020 despite the crisis. Now, this is better than we had anticipated back in the spring of last year. The primary factor behind our positive result was our strong end to the year. In the third and most notably in the fourth quarter, we fully reaped the benefits of our rigorous cost management and sales performance. In the fourth quarter, we posted a figure of 1.4 billion euros, which was significantly higher even than the prior year figure. Ladies and gentlemen, we are experiencing particularly challenging times in light of the coronavirus pandemic. But we have to earn the money to finance our transformation. This is why we are working hard to optimize our operating points. Step by step, we are boosting our resilience by further reducing fixed and material costs and by improving productivity. One of the foundations based on which we will reduce our fixed costs is the joint position paper drawn up with our Works Council. We will be freezing our headcount at the level of January of this year. And at the same time, we will be increasing the headcount in areas that are important for our company's future objectives. In conjunction with semi-retirement arrangements, this will allow us to accelerate our transformation process. It is important that all our regions operate at a profit. Accounting for more than 50% of our sales volumes, China undoubtedly plays an important role for the company. The operating profit of our Chinese joint ventures came in at 3.2 billion euros, which, as you know, is consolidated in the group's financial results. In South America, our product strategy is starting to bear fruit. With the Polo, Virtus, Nivus and T-Cross, we have launched several new vehicles that are tailored to the needs of our South American customers. The Taos will soon be added to that list. A compact SUV with a spacious interior, it is also an ideal vehicle for families. All vehicles are built on our MQB platform, and now economies of scale will allow us to operate profitably over the long term in this region too. Furthermore, extensive localization will make us less dependent on currency fluctuations. And our strategy is beginning to bear fruit. We also have introduced an extensive restructuring program. In each of the last 5 months, we've succeeded in breaking even. We are also continuing our ambitious recovery plan in North America. Here we have continued to gear our portfolio towards the SUV segments, which are popular and also deliver strong margins. In the US, with the Tiguan, Atlas, the Atlas Cross Sport and in future also the Taos, we already occupy a strong position now. In combination with rigorous cost discipline and the optimization of our administrative structures, we also expect to turn a profit in the USA this year. Alexander Seitz will provide you with more details on our regions shortly. Ladies and gentlemen, one of the key factors behind our success in 2020 was our strong product lineup. Demand was particularly brisk for the Tiguan and, of course, for the new Golf. After more and more of our emotive and high-margin derivatives entered the market in the second half of the year, the Golf family is now complete. The GTI, the GTE, GTD, the Variant, the All-Track, the Club Sport, and our number one model when it comes to performance, the Golf R. In 2020, the Golf once again was our best-selling model in Germany and Europe by a wide margin, despite the pandemic and the fact it was only launched during the course of the year. Now that the full range of Golf derivatives is available, and with a high order backlog, we have embarked on the first full year of sales for our best-selling vehicle. As you know, at Volkswagen, the year 2020 was characterized by electric mobility. Overall, we sold a total of 66,300 ID.3s. In numerous countries throughout Europe, the ID.3 jumped straight to the top of the sales charts, including in Norway, Sweden, and the Netherlands. We also added hybrid versions to almost our entire model range last year. We have an offering in almost every segment now. The Golf, Tiguan, Passat, Arteon, Touareg are now all available with the latest plug-in hybrid technology. And this signals our breakthrough moments for electric mobility. Overall, we delivered 212,000 electrified vehicles last year. 134,000 of these vehicles had pure electric drives, almost 3 times as many as in the prior year. Or, in other words, electric mobility is now becoming the norm. The Volkswagen brand came in well below the strict European fleet CO2 limits. Our vehicles emitted 6 million grams less CO2 than required. Over the 12-month period, we reduced our CO2 emissions by 22%. This constitutes a substantial contribution to the fleet targets of the group. The rollout of our electrification offensive is also powering the transformation of our factories. Our plants in Zwickau and Dresden have been completely revamped for electric mobility, and MEB production is in full swing. Since the end of 2020, we have also been manufacturing the ID.4 in the plants of our Chinese joint ventures in Anting and Foshan. The process of retooling the Emden, Hanover and Chattanooga plants for electric vehicle production is already underway. All of this demonstrates Volkswagen is a company that embraces responsibility and offers solutions. Our commitment to the Paris climate change is being backed up by our actions, and by 2050 at the latest, we aim to make our brand 100% carbon neutral, our vehicles and the entire company. This is our way to zero. Ladies and gentlemen, for various reasons, 2020 was a challenging year for us all. Thanks to rigorous cost management and spending discipline, we managed to achieve an operating profit of 454 million euros. At the same time, we invested 2.7 billion euros in landmark projects for the future. In the new Golf and in all its derivatives, we have rolled out a completely new electronic architecture in our MEB. For the group, we have brought a new fully electrified platform, the MAV, into series production. The e to the power of 3 software architecture for the i3, for the ID family, has taken digitalization to a whole new level, and it is now fully equipped for over-the-air updates. Moreover, in Zwickau, our first large-scale plant has been fully retrofitted to exclusively build electric vehicles. Now, almost in parallel with the pandemic, we made a success of the most fundamental technological transformation towards electric mobility. I will come back to this later, but for now, I would like to hand over to Alexander Seitz, who will give you a detailed breakdown of our financial results for the year 2020.
Thank you very much, Ralph. Ladies and gentlemen, a very warm welcome also to our virtual annual media conference. Now, what I'd like to do is to look back at the past fiscal year from an earnings perspective. The sales volume of the Volkswagen brand in 2020 was 2.8 million vehicles, which was clearly below the prior year by 23%. So we've had two-figure losses in all world regions, which was COVID-related, but at the same time, market shares were stable at the same time. This drop in sales revenue was at 20% lower than our reduction in unit sales, thanks to mix and pricing effects. And what was very positive, that in this crisis situation, we've been able to focus on cost cutting, which has allowed us to end up with a positive operating profit. So despite the declining revenues of 17 billion euros. So about €500 million was the operating profit before special items. Now, if we look at the individual quarters, you'll see that we had strong Q3 and strong Q4 performance, which allowed us to compensate for the losses of almost €2 billion from Q2. We've taken instant actions to counter the effects of the global lockdown in the second quarter of the year. Thanks to our ongoing and consistent reduction of costs and production control and inventory management. Now, this has meant that in May already we've seen that revenues recovered, and in the third quarter already we had been in a position to stabilize our earnings situation. And then in particular in the fourth quarter of 2020, we have delivered a strong performance with 1.4 billion euros. So this clearly means that we have benefited from those positive cost improvement position and also recovered from a rebounding market situation. But despite that demand side recovery, we've had a number of one-off effects that also influenced our operating profit. Now let us have a look at the factors affecting our profit in 2020. And there you see that the COVID-related loss of volume of minus 840,000 vehicles compared to the prior year is really the main reason for the decline in profit of 3.3 billion euros. Foreign exchange effects were also negative compared to the prior year, but those were overcompensated by pricing measures. Now, significant effects were related to such high inflation countries like Argentina, Brazil and Russia. Our product costs, because of higher spending in terms of emissions compliance spending, have weighed on our earnings to the tune of about 400 million euros. But a positive profit contribution came from two factors. First of all, our strong focus on cost reduction, which was reflected in a fixed cost reduction compared to the prior year of more than 1 billion euros. That's a very good development. But at the same time, we've had a structural effect of 600 million euros that results from the spin-off of the CSO, the car software organization. In order to advance the restructuring of our Brazil business, we have created reserves of 0.1 billion euros, and the set of measures we've taken there is a very important contribution to break even in 2021. So finally, despite the COVID pandemic, we've managed to achieve a positive operating profit of about €500 million in 2020, and we were even positive in our net cash flow. Now, our largest financial result or success in the past year was certainly the notable reduction of fixed costs, and there's been a number of fronts that we've been working on. Now, first of all, a level freeze in HR, which means no headcount increase, and we also reduced external hires to an absolute minimum in those areas where we're working on advanced technology plans. We have rigorously shifted or cancelled investment projects. We use zero-based budgeting and challenge boards across all board divisions, entities and regions, and we've also optimized our marketing spend. This has allowed us to at least partly compensate for the negative volume effects as a result of the COVID pandemic. And despite that volume drop of 23%, we could still generate almost €500 million above break-even. Our development costs were at €2.7 billion, and thanks to a structural effect, that was about €500 million below the prior year. Now, thanks to the carve-out of our car software organization, about €600 million of development spend was redesignated from the brand into that new organization in order to leverage group-wide synergies in software development and to create a shared backbone. So, thanks to those structural shifts, we have been in a position to maintain our R&D ratio despite the drop in sales at 3.9%. It's almost, our strategic target of 4%, and that is a success because despite COVID, we have continued unabated to work on our transformation and invested in forward projects. Our capex ratio was at 4.8%, so despite the drop in sales, we are still within our strategic target range. In particular, in the second half of the year, we have been taking great efforts to reduce our investment spending. In absolute numbers, in 2020, our investment activity was €3.4 billion, which is about €800 million less than in the prior year. We stopped or deferred investment projects if we believe they're not business critical. Now, conversely, it also means we did not scale back on investments that are required for our transformation. The operating net cash flow in the overall year was breaking even, thanks to a positive performance of €3.8 billion in the second half year. We have managed to compensate for the dramatically poor first half of the year. The major drivers for this positive cash flow development was the improvement of our operating profit in the second half year, well combined, of course, with our strict cost discipline and investment discipline. And also the reduction of net inventories was a major contributor here. Despite headwind from precious metals businesses, we've managed to reduce those inventories by about 10% in 2020. Now, if you compare that to 2017, that reduction is minus 23%, so much more pronounced. In fiscal 2020, all of our regions, of course, had to grapple with the severe impacts of the COVID pandemic. In the United States, our deliveries to the market have dropped by 10%. But despite that, thanks to our strict cost management, we've managed to reduce losses versus the prior year. Now, by continuing those efforts and having a clear strategy for growing the US market, we're very confident that we will be in the black this year. And mind you, with a sales volume that is 15% below our earlier break-even plans. Now, what's going to help us in that is our plans for launching the Towers, the ID.4, and the facelift of the Tiguan this year. In South America as well, despite deliveries being 20% down in 2020, we've been able to improve earnings. And there again, in the past year, we've been very successful in terms of working to bring down costs. And we've also launched an ambitious restructuring program for the Brazilian market. That program includes also capacity adjustments in the plants through shift reductions and also a high degree of localization of our MQB, a new Polo truck model as an entry-level vehicle for the region. And we've also been leveraging export potentials outside South America. So for South America, we also expect to break even this year, despite the fact that we're actually minus 30% overall compared to the overall market expectations that were the basis for our earlier turnaround plans. So what that means really is that achieving break-even points in those regions for the Volkswagen brand is a very, very important milestone towards durable and competitive profitability going forward. So in general, for the Volkswagen brand, we're upbeat. We're confident that the conditions, the operating conditions in 2020 can be significantly improved compared to the prior year. For unit sales, we expect an upwards trend and therefore want to come in above 2020 in terms of our sales revenue. For operating return on sales, we're aiming for a target range of 3 to 4% in 2021. I still need to point out two risks that we need to watch very carefully. Now, number one, it's going to be very important to see what states and governments are doing to contain the COVID-19 pandemic in our relevant development and sales markets. And secondly, we have to carefully keep track of the current semiconductor availability in the industry. A profit margin of 6% by 2023 continues to be our clear goal. And in order to finance our transformation and to lower the break-even point, we have identified four important control levers. Number one, we're going to do a fixed cost reduction of 5% by 2023, because the last year really has shown that we are capable of making great strides if we act consistently. So we want to follow up on that. Number two, a continued production and productivity increase in our plants by 5% per annum. Number three, 7% reduction of material costs by 2023. Number four, we're aiming for robustly positive annual net income in the regions. But it's not only that we want to finance our transformation, but at the same time we want to boost our profitability. Now, in addition to what I've already mentioned, we're also using the economies of scale by industrializing our MQB and MEB platforms. Our brand has made a number of upfront investments, and now and in the future, 80% of all the group volume can be defined based on these two platforms. This is also a very important instrument to improve our product margins, of course. And then, in a second step, we're going to open up new revenue streams thanks to the connectivity of our vehicles. And then, with our Trinity project, we are also going to dramatically take out complexity. So, you see, ladies and gentlemen, we have a lot on our plate, really, and we're pushing the transformation of the brand in financial terms as well. And now, we continue with Ralph.
Vielen Dank, Alexander.
Thank you, Alexander. Ladies and gentlemen, our figures for the exceptional year 2020 demonstrate that Volkswagen is on the right track, and we safely steered the company through the coronavirus pandemic. But we are not going to rest on our laurels. Even this year, we aim to outperform the broader market and substantially improve sales and profits. We've started the current year with significant momentum. During the first 2 months of 2021, the brand delivered 10% more vehicles than we did in the prior year period. In February alone, our deliveries rose by almost 30%. And following the sharp contraction in 2020 caused by the pandemic, we remain focused on achieving our margin target of 6%. Ladies and gentlemen, the situation on our sales market is gradually getting back to normal. At the same time, the speed at which the automotive industry is changing is increasing all the time, and for this reason, Volkswagen will be undergoing a more fundamental change than ever before over the next few years. With our newly launched Accelerate strategy, which I presented at the beginning of March, we will continue to accelerate the transformation across the entire brand. Just like we have with electromobility, we will be taking a bold approach to other technologies too. We now have a profound understanding of electric drivetrains. There are 3 other key innovations too: software-defined products, new business models, and autonomous driving. These 4 major forces are what will drive the development of the vehicles going forward. Only companies that can succeed on all fronts will be able to flourish in the future. Volkswagen aims to be the leader in the new world of mobility too. With Accelerate, our vision is set to become reality. Volkswagen strives to become the most desirable brand for sustainable mobility. In order to achieve this, we are focusing on 3 strategic value drivers: the value of our brand, scalable platforms, both physical and digital, and being a responsible company. We are pursuing concrete projects to this end, and during the current financial year, we will be achieving important milestones. With Accelerate, we are once again stepping up the pace of our electrification offensive and pursuing our ambitions. By 2030, our electric vehicles will account for at least 70% of our sales in Europe and 50% of our sales in North America and China. Our global car, the ID.4, will play an important role in our electrification offensive. Our first pure electric SUV will be produced and sold in Europe, China, and the USA. As of next week, we will begin with deliveries of the ID.4 to our customers all over Europe. Deliveries in the USA and China will begin at the end of March. Starting in the first half of this year, the ID.4 will be available in Europe as a 4-wheel drive GTX. This year we expect to sell around 150,000 ID.4 vehicles, and over the course of the vehicle's life we expect to sell 2 million units. With the ID.4 we are now rapidly increasing our BEV volume and scaling the MEB all over the world. This clearly underlines once again the Volkswagen brand is the group's champion when it comes to platforms. Today around 80% of the group's volume uses Volkswagen technology. In 2021, in addition to the ID.4, we'll be launching several models built using the MEB platform. The second half of 2021 will see the launch of the ID.6X, also known as the Cross, a 7-seater electric SUV developed specifically for the Chinese market. Later this year, we will be adding the sporty and highly emotive ID.5 for European markets. In total, we plan to deliver 300,000 fully electric vehicles globally to our customers in 2021. So 450,000 units in total, because we want to double the current amount. This puts us well on the track to become the global market leader for electric mobility. During this important period of transformation, we will of course continue to consistently expand our product portfolio. In 2021, we will also be launching new emotive products in all our regions across the globe. The second half of the year will see the introduction of a new sporty CUV model in Europe. There will also be a facelift to enhance the design, quality and digitalization of our successful T-Roc and Polo models. The launch of the Taos will see the introduction of a new SUV model for North and South America, and in the USA we'll be rolling out a revamped version of the Jetta. In India we are set to introduce the Taigun, a spacious SUV, and it's ready to go. Now the basis for this model is the MQB and our global T-Cross model. And in China, the Terramont and Tiguan, both very important SUV models, will be given a comprehensive facelift. Ladies and gentlemen, we are convinced that we have successfully put our electrification initiative into action. However, the real game changer in our industry will be digitalization. This is why, with our Accelerate initiative, we will be changing our profile from that of a hardware-centered manufacturer of high-quality cars to a software-driven provider of sustainable mobility. 2 weeks ago, we announced an important step in this direction. The ID3 and ID4 are now technically equipped to receive updates over the air and new functions. Now, the features people are familiar with from their smartphones will now also become commonplace in Volkswagen vehicles. We have set up ID Digital for this purpose. It's an agile project unit that works hand in hand with Software Org. Over-the-air updates will be flashed onto vehicles across the entire ID family. Every 12 weeks there will be a new digital customer experience, our new Magic Loop. At the same time, we are laying the groundwork for accelerated digitalization in engineering. With our TE master plan, we are revamping our internal cooperation model. We no longer think in terms of components, but in terms of functions and systems. We are focused on the digital customer experience, the user experience. Our structures and development processes are being geared towards this, and this constitutes a real paradigm shift for Volkswagen. We have already begun the implementation, and over the coming months, Thomas Ulbrich, as the new board member for technical development, will be working tirelessly on this process. Ladies and gentlemen, up until now, our focus as a manufacturer has primarily been the point in time at which a new car is sold to its first customer. With Accelerate, we are now developing new data-based business models. This means that in future, we will be generating additional revenues during the usage phase of the vehicle's life. We call this Business Model 2.0. By 2025, we aim to generate 9-figure revenues from this stream. As the global rollout of our electric vehicles progresses and the level of digitalization in our fleet sharply increases, we will scale up our range of new services by the factor of millions by the year 2030. By then, at the latest, we will have tapped a new source of high-margin revenues on a large scale for Volkswagen. And this is why it is so important that we lay the right foundations now. We are not going to wait until 2030. In the second half of this year, we will be launching a pilot project with our ID3 in 6 German cities in order to gain experience with various usage models. Based on customer contacts, we will examine our customers' preferences in 3 different categories. Subscription models as an introduction to individual mobility, pay-per-mile billing, and also additional functions on demand, such as navigation or a charging flat rate. Based on the experience we gain from this project, we will develop new services for the entire fleet. Ladies and gentlemen, the online sale of new vehicles is becoming a more widespread phenomenon too. This is why Volkswagen has come up with a clear idea and a strategy for online sales. The pilot phase of our digital sales platform commenced last year in autumn. As of this week, customers can begin the purchase of their ID3 or ID4 online, prepare the main stages of the purchase process digitally, and then conclude the purchase easily at the dealership. The next stage of the pilot process will begin in summer, when the customer will have the option of carrying out the entire purchasing process, including financing, for the ID family online. Then, in collaboration with our dealers, we will also be opening a digital marketplace in summer on the Volkswagen.de website. We will use these new digital sales models to gather experience in our domestic market and then quickly roll out online sales options in our other European markets too. Klaus Zellmer will be working on our business model 2.0 with his team and our dealers, with a view to gradually tapping new revenue streams in our markets. As you can see, a lot is going on at Volkswagen. And every year our transformation is becoming more visible and more tangible. The highlight will arrive in 2026 with the launch of Trinity. This car is essentially the pinnacle of our Accelerate strategy, a flagship project, our software dream car. Trinity, which we have spoken about on many occasions over the last few weeks, stands for everything that we can do and will be in future. The future starts now. We have defined clear objectives, the team is in place, the work has begun. Ladies and gentlemen, wherever I look within Volkswagen these days, our brand is on the move. There is genuine excitement. You can feel the positive energy that Accelerate brings to the company. We know what needs to be done, and we are going to do it. Thank you for your attention.
Mr. Brandstetter, Mr. Seitz, thank you very much. And with that, we're ready to take your questions now. And once again, technical note, as I said before, if you have any questions, please feel free to submit them in writing via the chat function and the browser. But also, if you want, you can also call in, and there is a slight time delay from the incoming calls and the live stream, so that should be no problem. And also, very important, when you call in, make sure you mute your tablets and your computers. Now, also for the Q&A session, I would like to welcome the members of the Management Board. We have Head of Sales, Klaus Zellmer, Head of Technical Development, Thomas Ulrich, Head of Human Resources, Wilfried von Raad, Head of Production, Christian Vollmer, Stefan Wallenstein, Management Board member for the China region, and Head of Procurement, Murat Axel. Gentlemen, welcome to have you on board. And with that, we get started with the first question for Mr. Brandstetter from Mr. Johansson of Automobile Woche. Mr. Brandstetter, is it right when you're saying that no internal combustion engines will be sold after 2040? Is that true for all global sales? Have I understood you correctly? The answer is that, well, we've always said that if we want to be carbon neutral by 2050, we have to assume that 2040 is the cut-off date for the final or last combustion engines hitting our roads. And I'm pretty sure that e-mobility will develop at a different pace in different regions of the world. In Europe and China, we're the trailblazers, certainly, and the US will following us. And there are other markets in this world where this will take a little longer. But in general, yes, our assumption remains valid, although there can be regional variations on the way from here to there. So we will be seeing different scenarios. Now joining us on the phone is Christoph Rauwald from Bloomberg. Can we have your question, please, Mr. Rauwald? Good morning. I'm calling from Frankfurt. I have two questions, if I may. Number one, for Mr. Brandstetter on material costs. Now, in the past, you've pointed out that when it comes to complexity, you're planning to reduce, to take complexity out of the system. Now, could you follow up on that, please, in greater detail? What are the control levers you have? So how can you make sure that you want to address the complexity issue? And I'm asking this question because just yesterday we talked about, not all countries really embarking on e-mobility, because there are large countries like India, Russia, or even South America who will continue to have two combustion engines on their roads, which means that complexity will probably stay on the level it is now. So could you give us an insight on what levers you have there? And my second question is for Mr. Seitz. You mentioned the net cash flow in 2020. Now, in the past year, this was not an original expectation. So what are your plans for 2021 when it comes to that? So it ends up being three questions, because I have another one, sorry, if I may. You want to bring fixed costs down, and you said you've taken 1 billion euros out in 2020. Now, does that also count towards your 2023 target of minus 5% reduction, or is the baseline 2021 rather than 2020? Now, Mr. Ravel, your first question went to Mr. Brandstetter, but I'd like to ask Mr. Axel to take it, and then Mr. Brandstetter will follow up on that. Okay, answer. Hello, Mr. Ravel. This is Murat Axel speaking. Material cost. Now, that traditionally is something that for the Volkswagen Group and the brand enjoys prominent relevance, if you will, and has allowed us to also arrive or to achieve good material costs for our products. And now we're looking at additional levers together with development and production. So we're not just focusing exclusively on components prices, but rather make this a broad-based approach. We're trying to take cost out in the early phases together with our colleagues from engineering by simplifying products, reduce the complexity of variations, all the way down to the shop floor and production, improve logistic cost, improve packaging cost. So also, you have our suppliers use some of these levers as well. We in the Volkswagen Group have access to a good toolbox, I think. And we believe not all suppliers really are fully utilizing the toolbox potential. So what that means is we make this toolbox available to our suppliers so they will be professional and flexible enough to reduce their own cost base, which directly has an impact on us as clients of those suppliers. But we also believe that suppliers will be benefiting because they are becoming more competitive in the process. Mr. Brandstetter, adding? Well, Mr. Ravel, maybe I add a note here on complexity. You have mentioned Brazil and India, and I think it's a case in point here. What we see now is the MQB effect really comes to fruition now. Why? The MQB matrix has been localized now in South America, in India as well. This is a platform on which the T-Cross sits. And that is a model that has been developed once, but it comes in a South America variant, in an Indian version, in a Europe one, in a Chinese one. So we're using the economies of scale in an optimum way. And when it comes to cost competence, we have worked very hard in the past years. Especially our team in South America has been showing us that you can develop this platform in a competitive way. And that experience has been transferred to India, where also another model like the T-Cross will be launched in due course. So we're leveraging synergies across the world. And of course, we've made, our homeworks, because our engine gearbox combinations has been reduced, that complexity. Generally, also the complexity of our offerings is going down. And obviously, in the future, if we want to sell our cars online, we have to be simpler. We have to offer a compelling product. And all of that goes back to reduce cost and complexity. And it shows you that globally, thanks to our major scales here, we can bank on the MQB and make complexity manageable. Alexander Seitz speaking. You mentioned the net cash flow in the second half year, 3.8 billion euros of improvement. So that led to an overall positive net cash flow at the end of the year. And it's true that all of these measures have been taken that will have an effect for this year, for 2021. We're talking about moratorium, base load structure, cash flow improvements. So what that means is we've created a good foundation with our toolkits of zero-based budgeting, the challenge boards, whatever you have. So these will be here to stay also in 2021. But going forward, we are aiming for 2 billion euros, but for the coming year, 1 to 1.5 billion euros. The fixed cost reduction of 1 billion euros that I mentioned earlier. You know that fixed costs come on 4 levels. One is depreciation from investments, then amortization of development cost and development spend, and then material overheads, also referring to indirect personnel costs. So that 1 billion euro is the entire chunk of those elements. Now we are defining measures that go forward in the years ahead. And indeed, they count against the overall budget for the year. Dr. Antlitz mentioned 2 billion euros. Now we account for 0.5 billion as a brand to the overall 2 billion target for the group. And we've achieved the target here. Because one thing is true, for overheads, both material overheads and personnel costs, we have inflation-adjusted changes, personnel changes, etc., that have to be compensated for. In addition, we have to improve by 5%. So with what we have achieved in 2020, we've created a good foundation. So this is a 1 billion bedrock that is already counting towards 0.5 billion in the overall group-wide reduction of 2 billion. Now we have Mr. Schwarz from Reuters, please. Thank you very much, and good morning, everyone. I have two questions, one on chips and one on the on-demand services. I hope you can hear me because the telephone line is not very stable. Hello? Yes, we can hear you. Thank you. So, what's the current supply situation for semiconductors? Because you just said earlier your target achievement hinges on the availability of chips and semiconductors, and obviously related to the COVID pandemic as well. So, I would like to focus on that first aspect. And my second question is, I would want to understand a little better how your additional functions will be available as on-demand features from the summer of this year. So you mentioned navigation can be ordered. And I also heard on the phone that you can also activate the seat heater, right, as an on-demand service. So what else are these online services or additional services? Okay, can we have Mr. Axel for the first question and Mr. Selmer for the second one? Hello, Mr. Schwarz, this is Murat Axel speaking. Semiconductors keeps the entire industry busy at the moment and concerned, and therefore let me add first a few general remarks to really come close to your question. Now, I think this industry has been facing a number of supply bottlenecks. In 2008-09, it was the global financial crisis, where a number of suppliers were on shaky ground, and we were essentially in a position to support them with money. Okay, then came 2011, Fukushima, and a number of semiconductors were affected, but only a few suppliers like Renesas that have automotive experience or expertise in some regions. So we were able to compensate for that with supplies from other regions. General natural disasters are always a local phenomena, and we can always respond to them. But now comes the COVID pandemic, which was a comprehensive crisis, but still we were able to respond reasonably well by using digital tools and technologies, by refitting workspaces at the supplier side with health measures. So we had quick fixes for those. But let me be very clear. The supply bottlenecks we see with semiconductors have an entirely different dimension to them, in the sense there will be no quick solution. Why is that? Well, simply, the supply is smaller than demand. So if you take all the different industries together, that is. So my assessment would be that this supply crisis is much more fundamental, more durable, perhaps. Because you're an expert in that business, you realize that building up new capacities from scratch will take you a year and a half or 2 years and requires a lot of capital investment. So those additional volumes or additional capacities will really happen after 2022 or 23 and after. So we're currently working in a task force mode. After I became aware of the supply bottleneck, I set up a big task force in our group. We have a total of 40 people at the moment who work around the clock, day in, day out, to get a handle on that situation and make it bearable and acceptable for our production network. There's no way around it. We need to admit we have to adjust our production schedules in some places. And I don't have a forecast at the moment, Mr. Schwarz, for the rest of the year. It's going to be very tough. We are battling, along as good as we can. We're trying to improve the situation. We've managed to do reasonably well for the time being, and really my thanks go out here to our teams and our employees in the different functions. But the upshot is the situation is going to remain volatile for the rest of the year. Definitely in the first half of the year. The second half, we see some improvements because we can transition to alternative chips with our suppliers. And one of our management principles is always commitment. And in this supply bottleneck, I learned a new word that I wasn't aware of, which is called decommitment. In other words, a commitment you've made yesterday are no longer valid tomorrow. That's what decommitment stands for, and that for us is an entirely new dimension, because we're not only depending on our own industry, where we hold the levers in the hand, but we also are competing now with other industries like consumer electronics. So yes, it's going to be very tough, and I think we have reflected on that in our earnings guidance, and our objective is to make sure by year end we will minimize the impact, and that's the status quo, Mr. Schwarz. And Alexander Seitz speaking, I would like to add one more thing. We're currently planning our factories for the next 3 months to come, so we know what's going to happen, and also our catching up program has been defined. So the overall package is part of our guidance for 2021.
Mr. Selma, now about the on-demand functions. Thank you very much for your question. I'd just like to take you on a little journey to try and explain what is possible today, what will soon be possible, and what will be available over the longer term. Now, this business model 2.0 was mentioned before, and this is part of it. Today, you can get infotainment functions on demand. These are features that can be activated, like ACC. Now, if you have an ID3 in the future, Travel Assist, Drop and Go, and Lane Assist, and ACC can be added on top. And this is getting in the direction of what I want to get to. And based on the data that we get about the customer's driving profile, then we can actually approach them and offer them different services. So we make offers to customers who then come to us. And the example here is that you have a customer with a battery-powered vehicle. And if we notice that he drives in long journeys, and before we actually provide it with additional range, which you can do digitally. I hope this explains a little bit what exactly the whole system is about. Mr. Brandstetter, the next question is from Mr. Zano from Co2 Motoricum. Has the corona pandemic accelerated or slammed the brakes on the electrification initiative? Now the answer, I think we have demonstrated that last year we continued wholeheartedly with the implementation. Our strategy towards electric mobility has been integrated into our Transformation 2025 strategy. This significant investment program, which is connected with this, has continued to be equally as significant for our company. Now, of course, in the year 2020, it required significant efforts. On the one hand, we had the adverse economic situation, we had to weather the crisis, but on the other hand, we also had one of the largest transformation programs towards electromobility in our industry. Zwickau was completely revamped last year to produce electric vehicles. Now, this is a very, very big plant which switched from building ICE vehicles to electric vehicles. And all of this took place during the coronavirus pandemic. At the same time, during this period, our new electronic architecture, software, was integrated into the vehicle. And now these vehicles can receive updates over the air. So we kept our foot on the gas pedal, and we did not let up despite the coronavirus crisis. We were uncompromising in our pursuit of electromobility. What we have noticed is that globally, in Europe with the Green Deal, but also if you look to America with Joe Biden, that electric mobility is becoming more and more important, which is why our plans have been adapted. One such example, the small BEV from 2027, well, that was planned for 2027, has been brought forward to 2025. So I think that we are making the correct decisions, I think we're on the right track, and we are pursuing our ambitions wholeheartedly to produce climate-friendly electric vehicles. And here I would say the corona pandemic has had no impact on our strategy. The next questions are from Henning Krug from Business Insider. Good morning to you in Hamburg, Mr. Henning. I have a question for you. You said we always have to offer more than our competitors. That's what Mr. Brandstetter said during his speech. But what about the activity, the attractiveness of Volkswagen passenger cars as an employer? And what about women in management positions? Now, thinking about Porsche, for example, you've got lots of women who are in management positions there. So, my question, is it not high time to get a lady onto the board of Volkswagen passenger cars? Now I have a question for Mr. Seitz. Now, in 2020, Volkswagen comfortably beat the CO2 fleet emissions limits. What does it look like for the future? And does CO2 have a tradable value? If you take the 95-gram target and multiply it by the number of new vehicles, then I get to nine figures. I'd like to know because you were comfortably beneath the limit. I would like to know if this gives you a little bit more flexibility in your finances. Now, to answer the questions for women in management positions, I'd like to ask Mr. Brandstetter, then I'll hand over to Mr. Seitz. Well, just let me say moin moin, as you do in Hamburg, and I'd like to respond to your question now. Now, we do have a female participant in our brand board meetings, and this is our head of quality. Yesterday, Mr. Clark left our company, and this is a very important position that he occupied, because quality is one of our key brand values. And to this position, we appointed a top female candidate, Ms. Engel. Now, she has a lot of experience in production. And now she is responsible for all quality functions within the brand. She always participates in our board meetings. Now, the topic of women in management positions is right at the top of our agenda. As you know, the head of model range at Volkswagen is a very, very important position. We call it G1, where the Polos, the T-crosses are built. We have Ms. Biener, who is responsible for this now, a woman. So here we have the first head of a model range within our top management group. So it's a topic which is a high priority for us, and as you can probably see, we have probably made a lot more progress than you might think. But I would like to hand over to Wilfried, see what he has to add. So, you asked when we'll have a board member, a female board member. Mr. Brandstetter gave you some excellent examples, as did you. Together 2025 is our strategy, and we are looking at diversity as a key component of this. Now, the female headcount is part of this, but also our international character on the management team. A lot has been achieved over the last few years. Our target is to have a 20% female headcount by 2025. And I do believe that we will achieve this. This has been implemented at some of the other brands, but you'll see it at passenger cars soon as well. Now I'd like to respond to your question about CO2 emissions. Now, of course, this plays a pivotal role for us. This year we helped the group because the CO2 emissions apply to the entire group and not to individual brands. But one thing is abundantly clear. With the ID family, we've succeeded by leveraging the MEB. Now, it is only fair that at a group level this is taken into account. Now, what we do is negotiate between the different brands. So I do think that we will find some financial incentives for this. Now, I do think that the brand has made a contribution, but also you have to look at the huge costs which were invested in starting this project. Now, for competition reasons, I can't tell you how much it was, but these were 9-figure sums. Mr. Schweiger from the Braunschweiger Zeitung has two questions. The first one is, what contribution is the Future Pact for fixed cost reduction going to make? I'll ask Mr. Zeitz about this. The next one is whether all the other objectives have been fulfilled. So, let's begin with Mr. Zeitz. Now, the Future Pact runs until 2025, and it has made its contributions. And this wasn't only when it comes to staffing costs, it relates to the full package for revenues. But to the extent that the German sites are impacted, what I can tell you is we have made a significant progress with headcount reduction. We have 11,500 overall. We also introduced semi-retirement for around 9,000 employees. Now, the original goal was around 14,000, because we wanted to reduce it by 23,000 overall, and then to increase the headcount by 9,000 for positions related to our future strategy. Now, the 2,000 will be added due to the coronavirus crisis. Then we have our roadmap for digital transformation as well. And this will be part of our fixed cost reduction program of 5%, which is why the Future Pact has made a significant contribution. It will conclude in 2020, and what we weren't able to achieve due to the coronavirus crisis will be transferred to our digital transformation plan. Now, Mr. Zeitz gave you some figures about the Future Pact. Now, I'd like to speak about the transformation of Volkswagen passenger cars. Here it's important that we have an eye on the future when we look at reducing our headcount, because we will have a demographic reduction in headcount. But we also need to ensure that we have what is necessary for the future of the company. We're doing well with the Future Pact, and with reducing the headcount, we are making an important contribution to our transformation strategy.
Now, on the phone, we have Jan Schreiber from AFP. Please, Mr. Schreiber. Good morning. Thank you for having me. Two brief questions. What about your experience about online sales? Is there anything you could say? Any user numbers already? So you've run a test there. So what are the numbers? And the second question, how's your brand going to perform in the next 1 to 2 years in the entry-level electric segment? So what will happen before the entry-level ID will be available? Now, can we have Mr. Zellmer first, and then for entry-level mobility, Mr. Brandstetter? Yeah, Klaus Zelmer speaking. There was a question on online sales. Like many other industries and OEMs, we've also seen double-digit increase numbers in terms of accessing our online platforms. Ralf Brandstätter said before that all the way to signing a sales contract, you can actually do that on our website now. And then beginning this summer, you can also sign a sales contract for the ID3 and ID4, by the summer that is. But, we don't want to compete for numbers, 20%, 50%, 100%. We're not going to do that. What is important for us is to use a customer experience. We want people to get information of a vehicle, then take a decision, maybe trade in their own car, existing car, and really allow them to skip back and forth between our online and offline meaning dealership world. But we're saying that in the years to come, when it comes to online sales, someone who's buying his 8th Golf already, people say, well, I don't need to go see my dealership again. Why don't I do that online? Rather than going physically to someone. And this is precisely what we want to do. We want to offer all those services online. That is certainly true. Mr. Brandstätter speaking. Before I talk about entry-level e-vehicles, just earlier we have looked at our new One Hub. Now, just to tell you what this is about. In the past year, we have completely revamped our internet presence. Now, we have one single internet presence wherever we have customer contacts across the world. And we have seen that people use the car builder much more than they have done in the past. We have 430 million users, 87 million different car building configurations, which is 35% up from the prior year, which led to a total of 700,000 leads that took people to our car dealerships. So that is a clear sign that we're doing something in this digital world and that we're reaching out to our customers in the digital domain as well. And now, when online sales come into the equation, we're boosting our sales further. The entry-level e-vehicles, well, it's true that the ID3 already now is the symbol for affordable and practical electric mobility. But we still have the e-up in our product line. This is not going to change until further notice. And as we have heard earlier today, we are planning to offer an entry-level model after 2025, beginning at 20,000 euros on an adjusted MEB platform. Question from Mr. Ulbrich, a follow-up on the battery day and the experience with your earlier experience. Why is Volkswagen not cooperating with Tesla in batteries? Wouldn't partnerships make more sense to create synergies? Mr. Ulbrich speaking. Well, partnerships today always make sense. And that's what we do. We partner with stakeholders by offering our MEB platform for sale. We know that we have entered into an agreement with Ford to do just that, and we're still in talks with others. But the fundamental discussions on batteries are certainly something where we have positioned ourselves pretty well with Northvolt, because battery cell competence, we believe, is something that we need to also grow within the company. We're also an investor in QuantumScape, where we have a stake in order to shape that future together. But we do not necessarily need to partner up with other car makers to collaborate. I mean, this is currently not part of our plans. Thank you, Mr. Ulbricht. And then we have Mr. Schweiger from Braunschweig-Zeitung. A question, follow-up question on the Pact for the Future. 2,000 jobs are to be transferred to the digital transformation. Does that mean you are reducing not 4,000 but 6,000 jobs if you add those other 2,000? Mr. Seitz, Alexander Seitz speaking. I think in our position paper we have prepared a good foundation for our talks with the Works Council, and there's a number of elements that contribute to the digital transformation roadmap. One is the level freeze, which is true for Volkswagen AG. So 50,000 non-production workers, out of which 30,000 are within the VW brand. And with that level freeze, we are not going to refill the positions unless they're required for monitoring responsibilities or compliance requirements. So 5,000 jobs that will not be filled again, a large part within our brand. I've shown you the relations before, and that will contribute towards that new roadmap. And when we talk about phased-out retirement programs or early retirement schemes that we are now defining together, this allows us to ride the demographic curve down until 2023. And on that basis, I'm sure we will manage to accelerate our roadmap digital transformation. And I said earlier, the Pact for the Future also had a number of COVID consequences. So yes, it will contribute to the acceleration of our roadmap or roadmap implementation. And if you look at the demographic curve that is also going down, and you combine that with the elements of phased out early retirement and partial retirement, we will be in a position to implement our transformation faster. Mr. Zellmer, we have Mr. Kierlein from Kfz Betrieb, who wants to know, how can dealer be integrated into online sales? So will customers need to specify preferred partner on the website? And what are dealers doing in respect of the car subscription models? Mr. Johansson also asked a question about what pilot cities have you selected for the car subscription test project. Klaus Selmer speaking. Thank you, Mr. Zierlein. Our dealers were involved. They have a contractual relationship, an agency contract with us. And in the case of the ID, the dealer acts as an agent. And we are the ones that sign a contract with the customer, but the dealer gets a commission from us for this. And the feedback we've received from our retail partners is a positive one. Just recently, we talked to our retail association there, and we realized that the agency model is really a forward-focused mechanism for online sales. So how's the dealer involved in all of that? The actual handling, also physical handling, in other words, a test drive, or trading in of an existing car, or the inspection of a vehicle. This will still be done physically in the dealership. So it's a permanent to and fro between online and offline. And this is the plan that we've also established with our dealer organization. All of our dealers are a very important part of our brand image, and I really must underscore that. The brand image and consolidation of our brand means not only we want to be first choice for our customers, but anytime you have a question, if you want to be, if you have a technical issue, if you had an accident, if you want to find information on a vehicle, you want to have a living person to reach out to, and these are our dealers. The dealers are the face of our brand. Now, Mr. Zellmer, there was also a question about the 6 cities of the pilot project. Answer? We have not defined those 6 cities yet. We originally were heading for 10 cities. We thought, these are regions where we can test and try the system. So we're now approaching home stretch to define the 6 cities, and we will communicate them in due course when the time's up. And by the way, one more follow-up. You also had a question about how our dealers are involved in the subscription models. Now, car subscription today are already offered by our colleagues from financial services. So yes, the demand is pretty positive. About 130 contracts have already been signed. We're only have only been doing that since late January. You have 8 vehicle classes. 2/3 of them are currently in the ID3 segment. So we work also closely in collaboration with our dealership association, and the pilot project is now giving us an insight on what customer demand is like, if these processes run well or not. 3 months, 6 months, what should be the ideal duration for a car subscription? So we want to reduce the entry-level barriers for our brand to bring more people, and we're obviously liaising with the dealership council. And the final question for our Q&A comes back to the focal point of our acceleration strategy. Mr. Brandstätter, how's the Trinity in 2026 going to be integrated into the ID family? Will it also be called an ID? And why are you focusing on a saloon car? Because these may not be very popular in the market as we speak. Answer. Now, first of all, Trinity is work in progress. It's a working title. The final name has not been decided on. So whenever time's ripe for that, we will communicate what the final name will be. The body shape that you're describing here, you're saying it's a saloon car. Well, people interpret differently and see different shapes in that, right? So especially when it comes to the space concept, we will make sure that it is right in the Trinity. Now, electric vehicles give you a big leeway to do whatever you like. Longer wheelbases, short body overhangs, more interior space. And then we go from there. And then we also need to decide what we do with a vehicle interior. Now imagine you're going to have an automated driver on board. Why do we have an automated driver? Well, because the computer is a better and more qualified driver. Safer, more comfortable, more convenient. So what are people going to do if the Trinity is self-driving on the motorway, autonomous driving, level 4. So what are you doing in that car? If we ask our customers, they first and foremost say, well, they want to socialize in the digital environment. They want to eat. They want to work. All right? So the passenger compartment of that Trinity will be geared towards the needs of people, so that people can make use of that extra time. You can expect many functions, and really people will believe this is added value that you get when you buy this Volkswagen. So this is part of our terms of reference. This is why this project is so exciting at the moment. This is why our teams are so enthusiastic working on that. And well, rest assured, you can expect many exciting information, pieces of information going forward. All right, thank you very much. And ladies and gentlemen, this has taken us to the end of our annual media conference. So for those of you who want to look into the other brands, well, tune into the press conferences by Audi and Porsche, which is going to be tomorrow and the day after tomorrow. Thank you very much for your interest in Volkswagen. Make sure you stay safe, have a good day, and see you next time.